Okay. Hi, Ron.
How you doing?
I'm good, and you?
Doing good.
So thanks very much for doing this session with me on mortgage rates and what's happening right now in the market. First of all, can you introduce yourself? Let people know who you are.
I'm Ron Sloan. I work for Bank of America. I'm a loan officer. My ID number is 460232.
Great. And how long have you been in
I've
the
been doing this about over 10 years. I worked at another bank prior to Bank of America, but been happy with Bank of America, stayed with them, and have not decided to go anywhere else.
Okay, excellent. So first up, or right off the bat, let's talk about interest rates. We've been hearing that interest rates are at historic lows. Tell us a little bit of that. What's the current rate and what's happening in the market?
Well, you are correct. We've been hearing that the Feds have been lowering prime, and that's the big indicator of our rates for long-term lending. So the Feds have lowered it, so rates have come down. You're looking, at historical lows. Rates are based on a lot of different factors, so it's hard to say, what rate you're going to get. But, I would tell you, you're going to be in the low threes, so 3% or even lower than that, today's market. Because when the Feds lower prime, realize that's what the bank lends the money on. So if the bank rate lowers prime to the quarter or less, banks are getting that money from the Fed, so then they turn around and lend it to the public. And of course, they put the margin in there to make some money off it. So that's why it happens.
Okay, so I know you mentioned rates are based on a lot of things. So sometimes what clients find is that when they see the mortgage rates on the news and the television and they go to the bank, it's not the same thing. You don't get the same rate. Can you explain that a little bit?
Correct. The big factor is purchase rates are better than refinance rates. Okay. Credit score, the higher the credit score, the better the rate's going to be. Is it a primary home or a secondary home or investment home? The rates are different on all those three. Mm-hmm. How much money or equity you have in the home. If you're putting 5% down on a new purchase, the rate's going to be higher. If you have 30% equity in your home on a refinance, it might be a better rate than someone that has only 20% equity in the home. So it's a big difference. And then you also get into the single family, 2 families, 3 and 4 families. Those all carry different rates also. So that's why it's hard to say, you see a rate advertised out there, it's hard to say whether you'll get that or not. Correct.
So we might not be able to say the exact rate that somebody can get, but the key thing is the rates are at historic lows. So to anybody that's looking to buy, for example, that's sitting on the fence wondering if I should buy, one of the key message for them, I guess, would be that it's going to be cheaper for them to borrow now. So if they're buying a house that's 500 or 600,000, because the rates are low, their monthly payment would be lower.
Correct. They'd be saving over $150 to $200 from 6 months ago or 8 months ago when the rates were even higher, when they were running in the high threes instead of low threes and twos. You know what I mean?
I've heard
so
people
of course,
saying,
it gives them a bigger purchasing power for the property. Correct.
Right. So they might be able to qualify or to be able to buy a property that's a bit higher price.
Correct. Definitely.
I've heard people saying that interest rates were, I think, at 18% or something like that at one time. So anywhere at 3% now, it's still a good rate.
That, I got to tell you, that's when I started the business. They had rates at 12.5 on a 30-year fixed, and people went crazy over that. We thought that was a low rate. Right. And now to look at us, isn't it crazy?
Yeah.
God.
So how have you seen the rates impacting the housing market? What have you seen in terms of the impact on real estate?
Well, always when the rates go down, housing prices go up because there's more, like you mentioned, buying power. More people can now afford a $500,000 house because the rates came down, so more people are in the market. That's affordability-wise. So now that $500,000 house might be only 2 on the block, and there's 10 people now going for it instead of the normal 5 people or something of that nature when rates are higher. So that's why housing prices go up, because as you know, as the demand's there for more people to buy, sellers realize that, and realtors, and they raise prices.
Yeah.
Correct.
And one of the significant things we're seeing now is limited inventory on the market. I know we've had limited inventory, the past couple of years, but I think now you're seeing it even more now. I saw the Facebook meme that they're comparing it to what toilet paper was around March, April time.
Well, it is true, because I think also when the pandemic started, everyone retrenched. Everyone took their house off the market. Everyone said, I'm just staying put. Let's see how this all plays out. So now people are finally realizing it, and they're like, no, we want to buy. And there's not that much inventory out there because people took it off. They're hanging low for a
Yeah.
while.
Yeah. So
Definitely.
if you are a buyer in this market, it's good for you because the rates are low, but you also have to be very competitive with your offer that you're putting in. If you're a seller, good for you because you put your house in the market, it's going to be gone in a couple of days, and you're probably going to have a couple of buyers bidding on it.
Correct. You are correct. And I think one thing buyers can do that really gives them an edge sometimes is called the pre-approval process. And what that is actually calling a bank, and hopefully they can go through. Bank of America does not charge for it, and hopefully they don't get a bank that does charge for it, but go through the pre-approval process where they're fully approved for a mortgage, meaning they've done the credit check, the employment check, and also the asset check, the three major parts of a pre-approval. This way they can go into a seller and say, look, I'm done. I am fully approved. I can close in 30, 60 days, whatever it is, to make that more negotiating better for them. And the seller might say, yeah, I might go with them instead of going with someone that's $5,000 higher that hasn't gone through the pre-approval process. And I'm going to have to wait 30 or 60 days to find out if they can even get a mortgage.
I mean, generally in this market, no seller accepts an offer without a pre-approval. So the first step when you are looking to buy is to get a pre-approval. So you yourself know, am I qualified for this mortgage? How much am I going to be qualified for? Can I afford the house I want? Sometimes I have buyers come and they're like, oh, I want to see houses, or show me houses first and I'll do the pre-approval. But that's I put in, what is it? The cart before the horse. Right? So first is getting the pre-approval. So what documents would buyers need to get a pre-approval?
Okay, the pre-approval process is, like I mentioned, is three parts: the employment, the credit, and the savings. And basically how we look at it is that we call it the 2-year plan. Your employment, we look for 2 years that you've been gainfully employed. Doesn't mean you have to be at the same job, but basically been working for at least 2 years. And we do count college education, things of that nature as part of an employment because we feel you're bettering yourselves. And we take, your salary as income from that employment. If you get additional income like overtime, bonus, or commissions, or whatever that is, we also use the 2-year policy, meaning we take 2-year average of that income. Okay, so just be aware that your bonus this year might be 100,000, but last year it was only 80,000. We're going to average those 2 years, okay, to come up what your bonus is going to be going forward. Mm-hmm. So realize that. Mm-hmm. And that's with all additional income. And then the next part is your credit. And we look at, you have two-year history on credit, that you have a piece of credit that's at least 2 years. We look for at least 3 pieces of credit, 2 on a credit report, and 1 can be a rental reference if you're renting. So that would count as 3, but we do like to see credit on a credit report, and that generates the credit score. And most scores have to be over 680 or higher, depending on the programs. Right. And then you have your savings. We want to see that you've had your savings. We look for 2 months bank statements to show that you've had that savings for at least 2 months. Mm-hmm. And I mean, if you're getting a gift from a family member, that's fine. We just need to document that the family member is giving it as a gift and not requiring it to be paid back.
Okay. So talking about credit, what's the minimum? I know you said 680 minimum credit.
Yep.
There are different programs if you have lower credit that you can also use.
Correct. Those are through the government agency. They're called FHA mortgages, mm-hmm. and they usually require lower credit scores. Some banks do have an overlay, we call that, where they'll say, no, even though FHA may go down to a 600 credit score, we won't do it. We require at least a 640 or 6 something credit score.
Mm-hmm.
So there's a lot of times that happens. But there's also VA loans, which we do very little in New York, which require a very low credit score also. So
Right.
that's why.
Okay.
But, but realize the higher the credit score, the lower your interest rate's going to be. So
Right.
it's very important.
So if you're thinking about buying a house, one of the key things to work on is to have good credit.
Your credit.
Your credit.
Correct. And you can today, most banks, your local banks, and Bank of America offers it too, where you can view your credit score without being pulled, because everyone's always worried when I pull my credit, my credit score is going to go down. And that is true. So you can view it without being pulled and see what your credit scores are. Educate yourself. Realize what you need to do. And, if your credit score is low, and it could be because of, charging too much or not paying on time, things of that nature, you can raise your score by utilization, it's called, on a credit card. If you utilize it 30% or below, your score is going to be higher. 50% or below, it's not going to be so high. And if you utilize it 100%, your score is not going to be that high. So that means
talking about credit score now. So, a lot of people use Credit Karma or these online tools to get a credit score. But then they come sometimes and they say, oh, my credit score is 750. But then the bank runs the credit and it's 725. So why is that? And how do you give credibility, if you like, to a score like Credit Karma?
Right. Well, no, that is true. Their scores are correct because they're not being pulled. They're just being viewed. Okay, when a customer comes to me to pull their credit, I'm actually pulling the credit for a lending purpose. And I have a dollar amount or whatever that, amount I'm lending to. So because of that, that's why their score jumps down, because it acts like it's already got that loan or that lending authority. When you go through Credit Karma or you're just viewing your credit online or through the banks, it's just viewing it. It's just seeing what the score is right now. And usually if your score is, I would say 10 to 20%, sometimes it can go down when I actually pull it.
Okay. All right.
So it's important.
Okay.
Did that help or?
No, that's fine. So let's talk a little bit about the changes we've seen since COVID. So, a lot of people were expecting, maybe the market is going to crash, or, they were expecting doom and gloom.
Well, there's a lot, correct, because realize one of the federal bailout packages was that people could hold their mortgage payments and not have to make payments, and it wouldn't show up as late, or any foreclosures or anything like that was all on hold. So I think it was like over 4 million existing customers with mortgages put their mortgage payments on hold. So the banks were all looking, saying, oh my God, is this 4 million people going into default? So that was a big scare with the banks. And then everyone worried about what is the housing prices going to do if no one, if this pandemic keeps going. So a lot did scare the banks. The banks have retrenched a little, I would say. They're looking for maybe some property types more than the norm down payments, and the credit scores might be a little more higher than normal. One thing I'll tell you is that if you have a relationship with the bank, they kind of give to their own customers per se, because they see your history, so they know you. So it might be a little more easier to do that route, call around.
Yeah.
But
what we've seen is that the real estate market has picked up. I think it's picked up at a much faster pace here in Queens and in the suburbs than a lot of people expected, faster than a lot of people expected.
I believe so. And I think that the people that deferred their mortgages, they're all paying them now. There's no defaults. It's still, we haven't hit any high default ratios. So I think banks are realizing it. And, because realize this is all new. We've never gone through this type of scenario.
Yeah.
And, I think they are starting to see the housing prices go up and the rates low, that we need to start lending, be more flexible. I know that with our first-time home buyer programs in certain markets, though, we are very liberal. We want to be in those markets. So they are, we are very competitive with them. We're giving closing cost discounts. We're, giving those first-time buyers a big opportunity to buy in those markets.
Okay, so you have first-time home buyers program, discounts on closing costs you offer. What is special about the first-time home buyers program? I know you said it's specific markets, but can you talk a little bit more about
Well,
that?
basically with those markets, they can put as little down as 3%. We pay for up to $7,500 in closing fees. The ratios are a little different. The qualifying is different. You know, it's a very nice program.
And is there a particular price range to qualify for that type of assistance?
Yeah, it's usually monitored to the government, the conforming loan limits. Let's put it that way. So it's usually 510 or below loan amounts, but in a high cost area, it can go a little higher or lower, depending.
Okay, great. All right, Ron. Well, thank you very much for sharing all that knowledge and experience that you have.
No problem.
And if anybody wants to contact you, how can they get in touch with you?
They can give me a call at Bank of America at 646-556-0241.
All right, great. Thanks, Ron.
Take care. Bye.
Bye.